This is Afaq Ahmed with another lecture regarding accounting. As you know that in our previous two videos, uh, I have explained you accounting elements, five accounting elements like assets, liabilities, capital, revenue, and expenses. In my previous two videos, I have cleared assets, liabilities, and expenses elements of accounting. Today, I will explain you another element of accounting, which is revenue. As you know that in accounting, the purpose of every business is to earn revenue, and without any revenue, no company fulfill his financial requirements. So this is the fourth element of accounting, that is revenue. So in this video, I will completely and deeply explain you the different scenarios, natures, and treatments of revenue. So first, if I categorize broadly revenue, so revenue can be categorized broadly: unearned revenue, or another name of this is revenue received in advance. So unearned revenue or revenue received in advance, and second is deferred revenue or accrued revenue. So in this video, I will deeply explain you fourth element of accounting, revenue, that what is the treatment of unearned revenue or revenue received in advance, and second is deferred revenue or accrued revenue. So first I explain you revenue. What is revenue? Revenue is the income of the company. For example, company produced a item in his factory, and what is the purpose of all the production of a company? Because the company ultimately wants to sell that item in the market to generate income. So that income of the company is known as revenue. So there are two categories: unearned revenue or deferred revenue. First, if I explain you unearned revenue, as the name suggests, unearned revenue, that revenue which company get, but right now the company is not entitled for that revenue. That's why it is known as unearned. The company is not entitled to get that revenue, but company received that revenue from his customer in advance. So what is the treatment of this revenue? I explain you this. For example, company rent out his building. Company has a property. Company rent out his building. So, and the person who got that building, who took on rent that building, he paid to the company 1 year rent as advance. Tenant paid to the company 1 year rent as advance. So what will be the entry? When the company rented out his building and the person who took that building, he paid the company 1 year rent as advance. So what will be the entry when company received 1 year rent as advance? So what will be the entry? Cash will be debited. For example, per month rent is 1 lakh. US dollars. So in that case, company received 1 lakh per month multiplied by 12. So company received 12 lakh US dollars as rent. And in my previous video, I explained you that as cash, when company received the cash, this is the asset account. And whenever asset account increases, so the nature of assets increase is debited. That's why I debited the cash. On the other hand, why company received cash of 12 lakh US dollars as rent? Because company rented out his property to the tenant and tenant gave 1 year rent at advance. So it means that if today I am on zero period and I receive rent of next 12 months, so technically I receive the rent, but actually the company is not entitled to show in his financial books that he earned that revenue because 12 months is not passed yet. So in that case, what will be the credit side? Unearned rent with the amount of 12 lakh US dollars. So this account is of asset nature, and you see that when company received 1 lakh rupees per month, so asset increases. That's why it's debited. On the other hand, unearned rent which received by the company from the tenant is of unearned rent is of liability nature, and the liability of the company is increases. So when the liability increases, we always write it on credit side. That's why this is the entry of cash debited and unearned rent credited. So this will be the first entry when company receive the rent of 1 year in advance. So this is the first entry. So what will be the entry in the next period? For example, we are in the period of we are in the month of January 2023, and company received 12 months rent. So 1 month passed. So now we are on 31st Jan. So as on 31st Jan 2023, what will be the adjusting entry? Because the company has a policy to maintain his financial books on a monthly basis. So it means that company maintains monthly accounts on this. So when the company has to complete 1 month, so now he has to finalize all the entries to complete that month. So what will be the entry of 31st? When in the start of the month on 1st Jan 2023, the company received the cash, but actually company did not earn that rent. So that's why it is unearned rent of liability side. So as on 31st Jan 2023, the company actually has earned 1 month rent. So when the company earned 1 month rent, it means that rental income of 1 month has achieved by the company. So how company show in his financial books of 1 month income? In this way. Now liability is reduced, unearned rent will be reduced by 1 month, 1 lakh. As you know that the rent of 1 month is 1 lakh US dollars. So after passing 1 month of Jan, the company has earned 1 month rent. So as you always know that rent income. So now the liability of the company is reduced by 1 month. So that's why I debited unearned rent. Unearned rent, as you know, that is of liability nature. And in this case, the liability is decreases because 1 month rent we have achieved. So liability decreases, that's why it is debited. So on the other hand, the company now earned the income of 1 month, so in revenue increases. So when revenue increases, it will always be of credited nature. Always keep one thing in your mind, that whenever you receive income in credit side, it means revenue increases. Revenue always has a credit balance, which shows that company earned that revenue. So after 1 month, this entry will be passed, which shows that the liability of the company is decreased by 1 month and the income is increased by 1 month. That's why liability decreases, it is debited, and revenue increases, it is credited. So this entry will be made at the end of that month to show in the financial books the actual and real picture of the uh, unearned rent. So this entry will be passed after every month. Jan, Feb, March, April till December 31st. This entry will be repeated 12 times in the financial books. So after passing 12 entries, what will be happened? In this entry, we earned unearned rent 12 times, 12 lakh rupees. So every month we will debit it unearned rent, unearned rent, unearned rent 12 times. So this credited 12 months will be set off with the unearned rent 12 times. So unearned rent credited, unearned rent debited. So this account will be closed. So at the end, what will be the actual entry? Cash debited and rent income credited by 12 lakh rupees. So this is the, you can say that the adjusting entry of the revenue nature at the end of every month to show the actual figure of income in the financial books of a company. Okay, this income is also known as revenue received in advance. Sometimes some books shows write the word unearned revenue, sometimes revenue received in advance. They both are same words used interchangeably with the same meaning. And this account is of liability. Whenever we receive, when we show in revenue as a liability, we will make this entry. Okay. And other treatment of this or the same entry can be shown as well. I give you another example. For example, in this case, with the same example, I show you income as a liability. Now, in my second example, I will show you the same nature of entry as I am going to treat is not as liability. I will pass the entry as revenue, and then I will show you that both these examples and both these treatments has the same effect. For example, when I received 12 months rent as advance, so what I will pass the entry? Cash debited and income, rent income credit. So now in my second example, I treat the income as an income. Cash, when I received a 1 month rent as advance, it means asset increases, and you know when asset increases we debit it. And I receive the income of rent income for 12 months. So when revenue increases, it will be credited. That's why cash debit and rent income credit. But you know that in this example, I received the income of 12 months of 12 lakh US dollars. But actually, did I earn that income? No. And when I close my 1 month, it means that actually, because what is the purpose to prepare the financial statements? Financial statements, like for example, we make balance sheet, we make profit and loss account, and in my profit and loss account, in my balance sheet, at the end of each month, I need to present and I need to show the true and fair picture of the company in the financial aspect. So what entry and what amount I will show in my financial books to show the true and fair picture of the income. So is it possible that I show in my balance sheet as a revenue or in my profit and loss account as a income of 12 lakh US dollars? No, I cannot. Why? Because if I show 12 lakh income into my financial statements, it will not give the true and fair picture because I earned only 1 month income and how can I show 12 months income? So what will be the entry at the end of as on 31st Jan 2023? As I in my previous example, I debited unearned rent and credit rent income because in that example I earned 1 month rent, but here I already passed the entry of rent income of 12 lakh US dollars. So at the end of this income, what will be the entry? The entry will be unearned rent income accrued income, yeah, accrued income and rent income mean I pass the entry with accrued income and rent income. This will be the adjusting entry at the end of 31st Jan 2023, which shows that I earned only 1 month and 11 months income I did not earn yet. So this is the second example of this revenue nature. Okay. So in my this example, I explain you accounting element of revenue, that it is revenue received in advance or deferred revenue or accrued revenue. Okay, now what is accrued revenue or deferred revenue? Okay, in my previous example, company received the income in advance. So this is the liability of that company, and after every month when company entitled for that revenue, it will debit it unearned rent and credited rent income by passing 12 adjusting entries every month. So in sometime what happens that company did not receive the rent in advance. Company did not receive the revenue in advance. Sometimes company has earned that revenue but did not receive. Mean company did not receive the revenue but earned it. Mean we I give you the same example that company rented out his building to the tenant, and after 1 month the tenant did not pay to the company the rent. It means that after 1 month the company has earned the revenue but actually company did not receive that revenue. In that case, what will be the entry? In that case, entry will be accrued rent debited and rent income credited. For example, 1 month rent was 1 lakh US dollars. So after 1 month, this entry shows that the company has earned 1 month rent, but in actual company did not receive the rent from the tenant till now. Accrued rent is of asset nature. and asset is increases because the company has take this rent amount from the tenant, so asset increases, and you know that when asset increases we make it on a debit side. So that's why accrued rent is debited, because it is the asset of the company has to take that amount from the tenant, and tenant did not pay that amount yet. On the other hand, rent income, company has earned the income because company has a property, company rent it out that property, and company get 1 lakh US dollars as an income from that property. So this is the revenue of the company, and when revenue increases we make it on debit side. Okay, so this will be the entry when the company has earned the revenue but actual did not receive that revenue. Okay, so after 4 or 5 days, when the tenant pay to the company that amount, so what will be the entry? Company receive cash of 1 lakh US dollar, and when company receive that cash, so now the accrued rent will be credited. Accrued rent will be credited, which means that now the cash is the asset, company received the cash is asset increases, that's why I debited the cash. On the other hand, accrued rent is also the asset of the company, but now the tenant has paid that rent, so my this asset is decreases, this asset of cash increases, I debit it. And another asset, accrued rent, is also asset, but now the company received that rent, so this asset is decreases, that's why this is credited. So this entry shows that now the company has earned that revenue and take that revenue from the tenant, so that's why accrued rent is credited. So these two entries will be passed in case of accrued revenue or deferred revenue, which means that accrued revenue and deferred revenue means that company did not receive the revenue, but the company has earned that revenue. Okay, so this is the entries. So right now I have explained you accounting elements of assets, liability, expenses, and now revenue. These four elements are very important in the accounting because all the accounting rotates, and you can say that all the accounting entries are sometimes assets, liabilities, expenses, or revenue nature. So we must have to learn the different natures and scenarios of these four elements to properly grip on accounting. So in my previous exam videos and in my this video, I have deeply explained you assets, liabilities, expenses, and revenue. So the other part is, and what are the adjusting entries of these elements? When assets increases, what will be the entry? When asset decreases, what will be that entry? And same case with liability, expenses, and revenue. So we pass that entries in the journals. So you know that in the accounting cycle, we know that there are some, first step is journal entry. After passing journal entry of each element, the next step is ledger posting. When we make accounting start from journal entry, this is the first step of the accounting to record every financial transaction into his journal books by passing journal entry. So this is the first step in the accounting process. So after passing journal entries, what will be the second step? Second step will be the ledger posting. What is ledger posting? Ledger posting means, let's suppose this example, cash debited when the company received the rent, so company debited cash and accrued rent credited by 1 lakh US dollars. So in that case, you can say that this is a journal entry. This is the journal entry. So in this journal entry, there are two accounts. Always keep one thing in your mind because accounting is of dual nature. If one thing is debited, on the other hand, a second will be credited. So this is the dual aspect of accounting. So this is a journal entry. So but there are two accounts. Cash is independent account and accrued rent is another independent account. So when we post that journal entry into the ledger, I will make two ledgers. One of cash ledger and second it will be accrued rent ledger, and third one is, if I make the ledger of these two entries, so third will be the rent income. So after passing these two journal entries, and when I post that journal entries into the ledger, I will need to make three ledger accounts of cash ledger, accrued rent ledger, and rent income ledger. Okay, so how I will make cash ledger? Okay, so you can say that in my first example, what is the entry? Cash. Cash is debited. Why cash is debited? Which thing make cash debited? Cash is debited because of accrued rent. So this is the ledger entry of cash, which shows that cash ledger, accrued rent 1 lakh rupees. So whenever the company wants to see that what is in his cash ledger, the company will open into his system the cash ledger. So the company will see that, okay, I have, and you know that when cash will be debited, cash is an asset account, and all the asset accounts has a debited balance, which shows that the company has that amount in that ledger. So in that case, when the company opens his cash ledger, it will see that, okay, in our cash the company has 1 lakh US dollars, but company wants to see that why company has 1 lakh US dollars. So this will help the company that company received the building rent, so that's why company has 1 lakh US dollars. Okay, so what will be the second ledger? Second ledger will be, you can say that, rent income ledger. So in that case, this is the debit side, this is the credit side of all the ledger accounts. Okay, so if I see in my first example, accrued rent debit and rent income credit, and you know that revenue always has a credit balance, because revenue is the income of the company, and if the revenue is credit, it means that company has that amount into his financial statements. So now the rent account is here, the rent account is credited. Why rent account is credited? Because of accrued rent. So because of accrued rent of 1 lakh US dollars, the rent account. So when the company will go to his financial statements like ledger, and when the company opens his rent income ledger, it will see that, okay, company has an income of 1 lakh US dollars. So but and the company, if the company wants to check why company has income of 1 lakh US dollars, so this will help the company that company received a rent income, so that's why company has a rental income ledger with 1 lakh US dollars. Okay. Third ledger will be accrued rent. Accrued rent will be of debited side and credited side. So if the company wants to check, and I earlier explained you that accrued rent is of asset nature, that's why in my first entry I debited it, because company has to receive this amount You can, in other words, you can say that accrued rent is the receivable of that company. The company has to receive that amount from the tenant but did not receive yet. So this is the asset account. So accrued rent is debited because of revenue, rent income of 1 lakh US dollars. Okay. So if the company wants to check his ledger of accrued rent, the company will see that okay, uh, accrued rent is the asset account, and when the company opens the ledger of accrued rent, it will see that okay, the company has received a rental income of 1 lakh US dollar from the tenant but did not receive yet. This is the meaning of that entry, because you know that in our accounting we always pass all the entries in debited or credited side, but every accountant when see the accrued rent ledger, and he will see that on the debited side rental income of 1 lakh is write down, it means that the company has a receivable of rental income by 1 lakh US dollars. So this is the asset of that company. Okay, so and you know that after some time the company received that rent from the tenant. On the other words, you can say that this receivable has been received by the company. So now what is the entry? Accrued rent is credited. Why accrued rent is credited? Because company received the cash. So in that case, 1 lakh US dollar is on credit side. So you can say that debited accrued rent debited by 1 lakh rupees, and now accrued rent credited by 1 lakh rupees. So this T account of accrued rent will be closed after passing cash entry. This thing shows that company has to receive the amount, and this entry shows that company has received that amount. This is receivable. This showed company has received. So when company received that amount, this debit side is set off with the credit side. Company has to receive something and company received that something. So accrued rent account is closed. This T account will be closed. But these two accounts will not be closed because cash ledger shows that company received 1 lakh rupees. Rent income shows that company earned 1 lakh building rent, and this is the income of the company. Okay, so if company receive every month 1 lakh rupees, so you can say that at the end, and you know that the counting period of every company is of 1 year. Okay, so you will see 12 entries of accrued rent, like Jan, Feb, March till 31st December. You will see 12 entries in their cash ledger, and you will see 12 entries of accrued rent in the rental income account. Okay, and on every month you will see rent income debit side and cash credit side, and close every month. So at the end of the accounting period of 12 months, when the company will make their financial statements like balance sheet, ledgers, so company will, at the end, company will see that in cash ledger rent income of 12 lakh US dollars, rent income 12 lakh US dollars, and the accrued rent will be closed by that amount. So this is the second step of the accounting process. First is to pass the journal entry, and second is to post that journal entries into the ledger accounts. Okay, because if you see in the practical example, for example, when after studying you will join any company to maintain, like for example you are an accounting student, and you learn these things in your books, in your college, in your school, and after that when you join some company, so as in the accounts department, so what will you see? You will see that there are some softwares, and in the softwares you pass these entries. For example, you will pass the first entry of cash and accrual rent. This will be the first entry. Then you will pass ledger of all the accounts in the company. So whenever company wants to see that what rent we have. If for example your senior says to you that please give me the report that uh, how much rent we want to take from our tenants, so is there any receivable? What will you do? You will go to the system and print out the and see the accrued rent ledger. So when you open the accrued rent ledger, this will show you all the entries. Here in my example, this is the only one entry, and it may be there were 50 entries, 100 entries. It depends upon the size of the company, that how big your company is in which you are working. So when you open the accrued rent account, and you will see that okay, in accrued rent there is a debit side, a rent income. So you will inform to your management that sir, we have earned that 1 lakh US dollars of rent income, but we did not receive that amount. So what will you do? You will call to the person and inform to the tenant that the person, the rent has been paid due to you, so kindly pay the rent. So when the person paid you the cash of rent income, so you will pass that entry of cash 1 lakh US dollars. So this T account, when you open the T accounts to check the progress of the rent income, this accrued rent ledger account will help you. This only this side shows you that you have to take 1 lakh US dollars from the tenant. This is your receivable, okay, asset. So when you will see other side of your accrued rent ledger, you will see that okay, we have to receive that amount, and now we have received that amount, so this account closed. Got it? And on the similar side, if your boss in the company says that please show me the rent income ledger, that how much income we have earned yet, so you will say that sir, we have 1 month rent income has earned of 1 lakh. If you want to show the report after 3 months, so there will be 3 entries. So you will say that sir, we have earned 3 months rent. After 4 months there will be 4 entries. You will inform to the manager, sir, we have earned 4-month rent income of 4 lakh US dollars. So these ledger accounts is very important in the company to show every account of a company, like cash, rent income, and accrued rent. Okay. So what is the third element of the accounts? Third element of the account is trial balance. First is general entries. After general entries, we post that general entries into the ledger, and after passing all the ledgers of each account, the third step is trial balance. Trial balance as shows that balance, and trial mean test. What does mean of trial balance? Trial balance shows that when you post all your journal entries into the ledger, so trial balance gives you the mathematical calculations that every debit side will be equal to the credit side. Okay, this show you this thing. So trial balance name shows that your all the debit and all the credit should be equal, and if your all the debit and credit side in the trial balance are equal, it means that all the journal entries and the posting of all the journal entries to the ledger are correct, accurate, and informative. So if in the case, if in your trial balance, if all the debit sides are not equal with the credit side, it means that you made some mistakes by recording journal entries, or by posting the journal entries to the ledger. So this is you can say that the checkpoint of your previous 2 steps, that either your previous 2 steps of journal entries and ledger postings are correct, accurate, or not. Okay, so this is you can say that the third part of accounting process to make trial balance. Okay, after making that trial balance, the fourth step is to make profit and loss account. In this video, I am just going to explain you these accounting cycles, and in my next upcoming videos, I will give you the questions with questions that how to pass journal entries, how to post into ledger accounts, and how to make trial balance by passing journal entries and ledger postings. Okay, so in this video I am just giving you the names of accounting processes, and in my future videos I will give you the questions with examples that how to make journal entries, how to make ledger posting, and how to make trial balance. Okay, as you know that what is the purpose of the company? Why company set up his business? Why company produce goods? Why company hire employees into his company? Why company do all these things? The purpose of the company is to earn revenue. The ultimate goal of every company is to earn profit, is to earn revenue, is to generate more and more money and to become more richer. So profit and loss account shows the company that either the company is in a profit situation or in a loss situation. This account shows the financial aspects of a company, that either company getting profits from his business or either company losses from his business. So this profit and loss account, you can say that is the mirror of the company, which gives the company the true and actual picture of the company, that all by making all the hard work in the company, that either at the end company earning something or company are in the loss. Sometimes what happens that company, let's suppose company has 5 products and 4 products company are getting profits and one product giving the company loss. So in after making profit and loss account, the company can take management decisions that which product company need to drop, which products company needs to enhance, which products need modifications, which products need some improvements. So this gives the true picture to the company regarding profit and loss aspect. Okay, after profit and loss account, company make balance sheet or statement of financial position. Statement of financial position. Okay, so as if you see that name, statement of financial position, this statement shows to the company that right now today company has this sort of financial position. So their major parts are current assets, current liabilities, fixed assets, and fixed liability. Okay, so every company, either it is a small size company, medium size company, or a large size company, every company maintains statement of financial position, and these 4 are the major parts of that financial position, which shows to the company that in their current assets what sort of current assets the company has. The examples of current assets, that inventory in the stores, how much quantity of inventory is in the stores, receivables, cash in hand, bank balances, investment, shares. So these all things shows on the current asset sides or in the statement of financial positions. And in that current asset section, the company see that right now we have this amount of assets like inventories, receivables, cash in hand, bank balances, shares. These all things comes here. Okay, not shares come in fixed assets. Okay, and on the other hand, for example, if company produced any good, any good. So what will be the happening? Company, for example, okay, it is very important thing here is all the companies, like big companies, always buy goods on credit, because in practical no company deals in cash. For example, company buy goods from a vendor and company say that okay, give deliver that goods today. I will pay you after 3 days, after 1 week, after 1 month, after 60 days. So in that case, what happens? The current liability sections guides the company about his liability situation, that how much money company owes to others. For example, company took bank loan, company take purchases, buy goods from the vendors, company has to purchase to his, company has to pay to his suppliers. So all these things have come in current liability sections. On the other hand, fixed assets, for example, company set up a business. So to run the business, company must have some things, like company has a land. On that land, company will set up the building. Company will buy property, plant and equipments, furnitures, vehicles, websites. So these all the things are the fixed assets of that company, and in the statement of financial positions, all these things come in the fixed assets element. So the examples of current assets by right: inventories, inventories, cash, bank, cash bank, account receivable. Account receivables means company sell goods to his customers and customers did not pay to the company that amount. So these customers will be shown as account receivables, and this will come in the current assets of statement of financial positions. And in this figure, company will see that okay, these are our account receivables, these customers have to pay to us, this money we have to get from our customers in future. Okay, so that is. On the other hand, current liabilities, for example, company buy goods from its suppliers and the company buy goods on credit. So the company decides like suppliers will come on current liability section. So if the company management wants to see how much money we have to pay to the suppliers, how many suppliers we have, so they will go to statement of financial position, and the current liability section suppliers will give the true and fair picture to the company that these amounts company has to pay to his vendors, suppliers. On the other hand, fixed assets, that means company how much land, building, property, plant, equipment the company has, like websites. These all things comes in the fixed assets of the company. For example, if the management of the company wants to see how much fixed assets we have in the company right now and what are the values of that assets, so company will give. So in the statement of financial position, fixed assets portion will help the management regarding sees all these things. On the other hand, fixed liabilities, for example, company wants to buy the land, company wants to buy the building, company wants to buy property, plant and equipment, company wants to maintain his website. So these are very expensive things. Sometimes the owners of the company does not have that amount to get to buy all these things. So for that things, company has to go to the financial institutions to get money from them, and as you know that the financial institutions give the money to the company, but they need to take that money back after some time. It depends upon the terms and conditions of the company and the financial institution, that in which terms they agree upon. For example, sometimes they agree upon that okay, I take 50 million US dollars from our financial institutions and pay that amount back after 3 years, 5 years. So all these sort of payments reflects in the fixed liability sections of the statement of financial position. So in short, statement of financial position gives the management a key highlights of all the financial aspects of a company, all the elements of a company, like current assets, current liabilities, fixed assets and fixed liabilities. So all these are all the things which the management of the company can easily see by viewing statement of financial position. So if I summarize all my video, I explained you accounting elements, which are in my previous example assets, liabilities, expenses, revenue and capital. So these 5 elements are the core of the accounting elements, because every journal entry will be of nature of asset, liability, expenses, revenue or capital. Every accounting element, every accounting journal entry will be among 5 elements. Either it will be of nature of asset, liability, expenses, revenue and capital. So when you understand completely about these 5 elements, so it will be very easy to you that in your real practical life, when you join any company and in the accounts department and if you see any financial transaction, so you can easily understand that either it is of asset nature, liability nature, expenses nature, revenue nature or capital nature. So which account you have to debit it, which account need to be on the credit side. So to understand these things are very important. So on the other side, when you understand these things, the accounting process starts by passing journal entry. After journal entry, you pass that journal entry to the ledger posting, as I give you 3 ledger accounts. So third one is trial balance. Trial balance give you the accurate mathematical balance that if in your trial balance, if your debit side and credit side are equal, which shows that all the journal entries and the ledger postings are accurate and or in a true sense, in a accurate manner. So on the other hand, if after passing trial balance you will go to profit and loss account. Profit and loss accounts give you all the information that after all your business of 1 year and 1 year 9 months, what did you earn? Either are you in profit or either are you in loss. So this statement gives the management a true picture to make decisions in future. Either company has to carry on his business if it is getting the profits, or company has to shut down his business because if it is getting losses. So after making profit and loss account, the last step is balance sheet or statement of financial position, which has the 4 major elements: current assets, current liabilities, fixed assets and fixed liabilities, which shows the true and fair picture on that date of the company, that what company own and what company owes to others. Okay, so these are the elements, and you can say that these are the elements of the accounting and these are the accounting processes. So after getting these things, you can easily make accounting entries and elements in your easily you can work on it. So in this video, I just give you the overview of all these accounting elements and accounting processes. In my next videos, I will give you the examples. I will make some detailed examples regarding in which I will cover all the 5 elements of the accounting, and after that I will make all the journal entries, ledger postings, trial balance, profit and loss account, and then statement of financial position, that how we transfer all the journal entries to the different accounts of the company. Because what happens that when you work in a company, so the point is company make all the financial accounts like journal entries, ledger postings, then trial balance, profit and loss account, then make statement of financial position. Why a company make all these things? Every company of every country is required to make all these accounts because of international accounting standards, which some known as IAS. So international accounting standards required to the company that every company which established in any country of this world, they have to follow international accounting standards. So in the international accounting standards requires to every company that they must have to maintain statement of financial position, profit and loss account, and statement of comprehensive income. So why? Because these statements shows every company true and fair pictures. So why company maintain that picture, statements? Because company maintain their statements, and after maintaining their statements, companies are liable to public that financial statements. Because you know that about stock exchange. What is stock exchange? In stock exchange, you see that company shares, there are a lot of companies in the stock exchange, and the customers wants to buy the shares of that company. So if I am an investor and I want to invest in a company, so why and how, which things help me to buy that shares? What I will do, I will go to the company website and I will see these 5 statements of the company to check the financial position of that company, to check the profit and loss count of the company, that either this company is getting profits or not, either this company has sound financial position or not. If I get a company in a sound position, which means that the company is good in health, so it is very good to invest that company, to buy the shares of that company. So I will buy the shares of that company after viewing all these things. And if in future the share price of the company will increase, so definitely I, as an investor of that company, also I will grow, also I will earn more. So so in short, these statements are the requirements of every company to maintain, and after maintaining they have to give the true and fair picture, and after giving true and fair pictures they are liable to public that financial statements to easily to easily visible for the customers. Because if customers want to invest in that company, this is the requirement to check the financial positions, and then the customer take the decision that either I have to invest in that company or I don't have to invest that company. Okay, so there are a lot of accounting standards. International accounting standard number one, two. These there in my next videos I will when I will because this is a very scratch level of the accounting. In my future videos I will give you examples to solve the questions regarding IS1, IS2, IS6, IS8, and what are their requirements, what are the accounting standards. For example, if the company wants to manage their inventory, so in that case IS2 will help the company, that every company, if the company wants to manage their inventory, so international accounting standard 2 will help the company to how to manage, how to maintain, what sort of records the company has to manage in case of inventory. So every element there is a accounting standard, okay, which bounds to the company, that the company has to fulfill that requirements of international accounting standards if the company wants to work in a proper way. So in my these videos I just give you the overview of the accounting elements as well as accounting processes, and I give you a little bit example that why a company wants to liable to maintain these accounts, because international accounting standards bounds the company, because the company has to maintain, then book, then follow the accounting standards, then publish for the future investment of the customers. So I think in this video I give you the example. In my next video I will start the questions in which I will one by one explain all the elements, and then I will make all the accounting process steps, so that how to pass journal entries and how to transfer the journal entries till the statement of financial position. Hope you understand this lecture. If you have any query regarding this lecture, you can comment. I will try to guide you and give the answer of that question. So thanks to watch my video. Please subscribe this channel so I make more videos for your information. So thank you very much for your time. Have a nice day.